Welcome back. You're watching The Money Show with me, Kavita Thapliyal. And now we move on and let's talk about your home loan. And in fact, all those people who really want to pay off their home loans as soon as possible, is it the right strategy for you? Yes, you must be worried about your rising EMI. But then, is this a good strategy to pay off your home loans in lump sum? Are you really financially ready for that? Should you be taking up this aggressive step? And if you can, what should be your financial portfolio status? Let's decode all of this with Gautam Kalia, Senior Vice President, Head Super Investor at Sharekhan by PNB Paribas. Gautam, good evening and welcome to the show. A very crucial topic because a lot of time our viewers also keep asking us, the repayment strategy for their home loans. Definitely, rising EMI is a huge concern which is burning a hole in their pocket. And although banks have tried increasing the tenure of the loan, or people who are preferring raising the EMI limit have gone ahead and done that also. But the interest rate scenario is still not very clear, looking at inflation and monsoon and different kind of concerns, even of the global market, Gautam. Now, keeping that in mind, if someone really wants to pay off their home loan in lump sum, or maybe aggressively just use up all of their investment, and if at all they have that much of money, do you think it's the right strategy to just get rid of the home loan, specifically looking at the interest rate scenario, which earlier this year we were talking about, we might see a rate cut happening by the end of this year, but that looks very unlikely looking at the kind of scenario. So what is your take?
Great question, and these questions come up a lot with our clients as well. Really, interest rates don't seem to be easing up, so your EMI may be here to stay for a little bit longer. Your inflated EMI, which has obviously gone up over the last 1 or 2 years. But really, when it comes down to what we are talking about is a problem of plenty, where you are able to afford the higher EMI. And it's, let's say, coming at the cost of your SIP, your monthly payments to your investments, your monthly savings, or you're trying to decide whether you should redeem some of your investments in other asset classes and try to pay this off. So really it boils down to opportunity cost and comparing the two. And the simplest way that I explain this to my clients is, when you're looking at a home loan, you're looking at an asset class where you're getting a guaranteed saving of 8.5% or 9%, depending on what rate you're paying. Let's assume, for the sake of simplicity, you're paying 8.5%. So it's like a guaranteed saving of 8.5% if you pay off more of your home loan. And if you start viewing it like that, it's like a fixed deposit where you're putting in money and you're getting 8.5. Here you are saving 8.5 by paying extra and paying in advance. So if you're able to flip that in your mind and think of the EMI like that, then you understand that this is like an investment at 8.5, and then you can compare with other investments. So if you have SIPs and equity mutual funds that have delivered 18% CAGR over the last 5 years, then the comparison becomes between whether you want to continue earning that 15 to 18% CAGR, we normally project 12, or you want to have this, which is like a guaranteed, reduction. So really it becomes a choice there, and it becomes a little bit more complicated when you add in the tax element. So depending on whether you've taken a joint loan and it's a joint ownership or it's single, how much tax are you really saving? Because that is also a guaranteed amount. So my suggestion to everyone would be that if possible, if you are bullish on equity and you have equity investments, and therefore let's say the next 10-15 years, please continue with those and continue with your EMI. There is no hurry to close your loan. You can continue with both because we've done the calculation. Really, it works out best over the long term, even if you assume a 12% return in equity versus, let's say, 8.5% home loan rate, because really that's the math. So math will always favor the higher return. But obviously keep in mind your tax saving, and try to make sure that you are able to maximize your tax saving as well when you're deciding to, let's say, part prepay. But if you're more conservative and you say, 8.5 guaranteed return is much better than, let's say, market may not give me 12, market may go down. And if you have that kind of a view, you're not very comfortable, your risk appetite is not that aggressive, then you're better off, prepaying your loan as quickly as possible. Though in the longer term, if equity does deliver 12% plus, then you are at a loss. So that is something that you have to keep in mind. What you're most comfortable with.
All right. So you obviously have to look at your financial status and accordingly strategize this repayment strategy. But then, having said that, the part payment process is very important. Do you think one can use their investments to do that as well?
Absolutely. So you can definitely, let's say, if you have a SIP of 30,000 and suddenly your EMI has gone up, you can for a period of time reduce your SIP and fund your EMI. Or let's say you have a lump sum payout, you can redeem some of your investments and put that to reduce your outstanding home loan as well, so that you reach a comfortable EMI stage. It's all about your comfort, what you're trying to find in terms of balance. But you need to keep this in mind that every rupee, because it's all about opportunity cost. Every rupee that you take out from, let's say, an equity asset class where you're projecting a 12% return, and you are putting that in reducing your home loan exposure, where you are essentially, in a way saving 8.5% every time you put extra money. So that opportunity cost needs to be kept in mind for your own comfort. So if you are seeing that a large chunk of your salary is going in EMI and you're just not comfortable with that on a month-on-month basis, and you want that to be at a more controllable level, comfortable level, then definitely, you should do that, because money shouldn't be a source of stress. So you should do that to make it easier for you. Because let's say tomorrow if the market corrects and you're looking at your portfolio going down, then you may be induced to taking wrong investor behavior, because you have this big EMI also on your head that's going on. So it's kind of finding that balance between what you're comfortable with and really how you are experiencing this on a day-to-day basis compared to your salary. So my suggestion would be, yes, do seriously consider part prepaying your home loan, while evaluating your investment decisions.
All right, I have more questions on this topic, Gautam, but then we really have to move on and start taking viewer queries also because that's what people are really waiting for with you. I don't have Ramesh Murwal on the phone line, Gautam, but then I do have his question with me. So he wants to understand if investing in an ELSS fund for someone who's about to retire will be a good strategy or not.
So, Ramesh, you can continue with ELSS if you are paying tax, and it still serves as a tax saving vehicle for you post retirement as well. But if you're not paying tax and you don't need that additional tax saving, then you have other categories in mutual funds that you can consider, which achieve the same objective but don't come with the additional lock-in of a 3 year like a ELSS scheme does. So many ELSS follow a flexi cap strategy. So you can look at a flexi cap category fund or a multi cap fund instead of putting more money in ELSS than you need to. Unless there are some really good funds out there that beat and you're comfortable with putting in money locked in for 3-4 years, and you're not really you don't envisage needing that money, then it's okay. But otherwise, I would not suggest that you take that additional lock in for no reason.
All right, Gautam, we move on. Mr. C.K. Yadav is on the phone line with me. Hello, good evening, Mr. Yadav. How are you doing today?
Fine, madam.
Thank you so much for sending us your question. And you want to know best index funds for almost 5 to 7 years, and that's your time horizon, right?
Yes, madam. Yes, madam.
Perfect. And you want to invest via SIP into a mutual fund. And what will be your investable amount? Any goal attached to this investment?
Maybe 5,000 per month.
Okay. And for how many years? 5 to 7. Okay. Perfect. Got it. Got it.
Yeah.
Gautam, over to you.
So, Mr. Yadav, I'll give you the index funds. My suggestion, because it's 5 to 7 years, we are suggesting equity index funds. So you can look at about 40% allocation to the HDFC index fund Nifty 50 plan, a 25% allocation to the ICICI Prudential Nifty Next 50 index fund. So these are large cap focused. Then the rest 35 allocation is to one mid cap and one small cap focus. One is the Motilal Oswal Nifty Mid Cap 150 Index Fund and the Nippon India Nifty Small Cap 250 Index Fund. Now, just in case, because your question was that you wanted index funds, just in case you're open to the idea of looking at actively managed funds as well, our research has selected 5 funds to share with you, which you could also consider because their performance has been quite good and they're part of our approved list. One is ICICI Prudential Blue Chip Fund, where we suggest you look at a 30% allocation, again large cap. Tata Large and Mid Cap Fund, where it's a large and mid, they're 10% allocation. Then 30% in mid and small, which is SBI Magnum Mid Cap Fund and ICICI Prudential Small Cap Fund. The last fund, where another 30%, which is a Flexi Cap, which is HDFC Flexi Cap Fund. So you could consider a more active fund portfolio as well to meet your needs.
Have more time in hand. Is Mr. CK Yadav online with me? Mr. Yadav, you want to ask any more questions to Gautam?
No, sir. No, madam. No, madam. That is fine.
All the best. Prasanjit Basai is our other viewer, our next viewer who's on phone line with me. Hi, good evening, Mr. Basai. How are you doing? From where are you calling?
Good evening, ma'am. I am calling from Bhagalpur, West Bengal.
Okay. All right. So I can see the details that you've sent us.
Yes.
So you have invested, you have regular investments going on in share market and mutual funds also you're investing in. You have 6 mutual funds? Okay.
Yes, ma'am.
And you're investing since how many years, sir?
I am investing last 1 year. From
Last
end of
1 year.
I am started investing last year in June 2022.
Okay. All right. First of all, congratulations, Mr. Basai. You've given us your monthly take home and you are able to invest in direct equity. You are doing it through mutual funds also. Congratulations. And this is definitely a learning for the other viewers who just keep wondering how to save that little bit of penny, to start their investment process. So congratulations over there. But as far as your funds are concerned, are they good or not? And your time horizon is 10 to 15 years and you want it for your daughter's better future, her higher education and also your retirement. Retirement goal you might want to think about and give us an approximate figure in terms of corpus. But then for your daughter's education, 10 to 15 years, how much of amount are you looking at? What's the ballpark figure that you want to give?
After 15 years, I am expecting around 1.2 or 1.5 CR.
Okay, just for one goal or both the goals?
No, these goals may be only for my daughter education.
Daughter's education, got it.
As per little bit for my retirement concern.
Okay. Got it. You might have to increase your investment amount, but then let's get this direction right from Gautam. Gautam, although it's a very aggressive target that he set for himself, 1.2 crores for daughter's education, and we also know that one has to think about future and one has to consider inflation when we're talking about education, which really moves higher than the food and other kind of inflation that we talk about. Okay, 1.2 crores in 15 years, and so far investments in mutual funds is 6,000 rupees.
Great. So, Mr. Desai, again, congratulations on this journey. You're on the right path. I'll just come to your funds in a minute. But at the rate at which you're saving now, if your total investment of 12,000 per month grows at between 10 to 12% a year, you're looking at roughly about 24-25 lakhs in 10 years. And that 24-25 lakhs corpus becomes 50 lakhs if you extend it to 15 years. So just that additional 5 years will double your corpus to 15. And if you can just add another amount here gradually as you invest and just keep it held for longer term, like 15 years, then I'm sure you'll be able to reach your 1.2 crore that you've indicated. So just keep the journey and just try to save gradually more as you can. Now, when I come to your mutual fund schemes, HDFC large and mid cap, HDFC mid cap opportunities, and quant small cap fund, there's no need to change. Please continue. The Mire Asset Flexi Cap is a new scheme. So we won't be able to provide you a view right now because there's not enough track record for us to study it. But as of now, please continue with that. We'll be happy to give you an opinion after the year. Your HDFC FlexiCap fund also, please continue. There's nothing wrong there. And your Navi FlexiCap fund, it's a FlexiCap strategy. So maybe move that to an ICICI Prudential Blue Chip. So that you have a large cap allocation as well, because you don't have any large cap in your portfolio. So that's it from an allocation perspective. Only one fund that you really need to change for now, and gradually over time, I think maybe as you build more savings, maybe look at other asset management companies also to add maybe one or two schemes in, because you got already 3 schemes of HDFC.
All right, Mr. Bisai, is there anything else you want to ask Gautam?
Sir, just I have now around 42K salary of my monthly income, but gradually my salary also increased and my savings amount also increased. I can assume after 1 or 2 years my salary and promotion will be happen. So after 1 year or 2 years I can invest more, and that could be increased up to 15K.
Sure. Yeah, sure. That's the right strategy that you should be opting, and that is also expected also from you, because the corpus that you want to reach, you will have to increase your investment amount. Thank you so much, Bisai, for sending us your question. And with that, thank you so much, Gautam, for being on the show and helping our viewers with their financial portfolio queries. And wrap up on the Money Show as well, but then I'm going to leave you with our WhatsApp number and email ID, where we keep waiting for your financial portfolio queries, be it mutual fund, insurance, tax, loan, anything you want our guidance about. 865-797-4571 is our WhatsApp number. The Money Show at etnow.tv. That's the email ID where you can send us your queries. Thank you so much for watching. Goodbye.